Welcome to Market Update featuring by Rationale and Market Soul. Markets was holding up well until the US closed on last Friday thanks to strong earnings, but tariffs become the key risk to watch. Today we'll go over what's happening and how markets are reacting and what to look for next, because there's a huge volatility going on in the market right now because like tariffs put, then after that there's some withdrawals, which I'll get into details a little bit later on. We'll go over like a key some currency pairs plus some other instruments to see the potential impact of those drivers and what to watch for the coming weeks. So for today's video, I wanted to structure it as in general. I just want to put frame about markets, that how our markets are pricing to make it easier for you with the table that I want to show right now. Here now you see the current market structure right now. So there are currently four major drivers that are pretty influential on market pricings. First of all, macro side. Macro side means like a Fed, Bank of Japan, ECB, Bank of Canada, like their stance and their global inflation and growth outlook. That's all. I mean, it's like all, you know, central banks policies and stuff. That's the first major driver. The second one is it's current ongoing US earnings. The third one is it was last week's topic, but a DeepSeek AI tool that is founded by China, which puts some pressure on ChatGPT and AI markets in US, and brought some concerns about if the AI facilities could be done much cheaper than in US. That debates brought, and that's why market pricings it brought some volatility into the market. But then it was understood that it was a bit temporary and stuff, and but it brought some volatility. And this week's issue is tariffs that we received at the close of last week's US, while US market was closing last week, and also over the weekend we received some news. So yeah, in general, what's going on, I'll try to go over factor by factor, macro, US earnings, DeepSeek, tariffs, and what kind of impacts they do have on different on multi-assets. That's what I'm trying to, that's how I try to shape, how I try to evaluate current market pricing. So on the macro side, the Fed held rates steady as expected, and Jerome Powell didn't signal any rush to cut rates. Despite that, the bond market has already been doing the cutting for them, actually. The thing is so still the base scenario is dovish, they're gonna cut rates, but they're just giving some signal that they're gonna pause, because probably they want to see at least a first 3 months or something, first quarter of Trump's administration to evaluate, because it's pretty important for them to see the potential impact of Trump's administration on inflation outlook. As you might remember that when they won the election, the Republicans won the election, the first reaction of the market, higher long end of yield curve. What does that mean? With the potential impact of tariffs gonna come up, price is gonna go up, and inflation expectation went up. With that expectation, for sure, long-term yields went up, because long-term yields is kind of indication of inflation expectation. That was the main. That's why Fed probably would like to see if this impact of Trump's administration on yields is permanent or temporary. Accordingly, they'll be acting. But currently on the inflation side, when you look at PCE data last week, also there are some critical inflation indicators that Fed has an eye on it, they are also showing like improvement in the inflation side. That's why they don't have any rush. Also on the growth side, I mean, at least until now there are no major issues going on right now. That's why they don't have any rush. So when you go to like a Canada, the central bank like Bank of Canada cut rates by 25 basis points to 3%, but they're not promising more like cuts just yet, especially with US trade uncertainty. So they have some issues on the economic growth side. First of all, that's the major reason that they cut interest rate. That's the first. The second reason is they have a lot of uncertainty going on with tariff side with US, because their trade is so high with US, and in any kind of tariff would impact their economic growth and stuff. That's why probably they're just like it's a precautionary act that they're cutting rates for now. Meanwhile, the ECB side also cut rates, but the real issue is growth with them. GDP stalled in Q4 with Germany and France contracting. Markets are now like pricing even bigger rate cuts in March to support the economy. That's the major part. And I'm just trying to like summarize what's going on in general, like all central banks, because this like a rates divergence is the key factor that shapes market pricing, especially in the FX market. Japan is still hiking rates. That's like unlike the rest of the world. Rest of the world is cutting, but they're like hiking rates. The divergence is definitely something to watch. As you might remember, after the unwind of that crowded carry trades against Japanese yen, USD had gained its momentum back. Like USD Japanese currency, yen pair had come down after this like unwinding of crowded carry trade on yen against yen. Then USD yen got his momentum back, and like yeah, that's the main thing that I'm watching on that side. Hawkishness from Bank of Japan and risk off sentiment would be supporting Japanese yen in the upcoming days. So what I'm trying to say here is, as you can see, like in the current situation, the base scenario, I mean, apart from Japanese yen, the base scenario is dovish pause. What does that mean? The base scenario is they're still cutting rates, apart from Bank of Japan, but they just want to stop and see if what's going on with tariffs, what's going on with geopolitical tension and stuff, you know. But still, they're on the path of cutting rates. So in that scenario, it's more likely to see a risk-on sentiment for sure, because that rate cuts would bring liquidity in the market. And in that scenario, we would like to, it's likely to see stocks, cryptos, euro, Canadian dollar, Aussie, and EM currencies to perform better. That's the potential result that is likely to see in that scenario. So when you come to US earnings, the stock market stayed positive mainly because of strong corporate earnings. So far, according to FactSet data, 36% of S&P 500 companies reported Q4 earnings, and 77% have beaten estimates, right in line with 5-year average. More importantly, markets are reacting more positively than usual to earnings beats, which is helping keep risk sentiment strong. That's what I was trying to mention actually. Up until US market close last week, the market had been pretty rewarding positive earnings surprises from S&P 500. Also, it was like going to break another record. But then while we were approaching to the Friday close, we received those tariffs news and stuff, and we saw a sell-off, and over the weekend we received the main news. And with that scenario, like with the current situation of US earnings that is outperforming, it's doing we're receiving good earnings. It also supports risk-on sentiment, which would lead stocks, cryptos, euro, Canadian dollar, or like EM currencies to outperform. The third factor, DeepSeek. So if we see a permanent impact on AI, I mean, it's highly debatable for now. I don't want to make like a huge commentaries on like a DeepSeek or AI infrastructure, as it's not my like a major field. But the thing is, the current pricing says that if this DeepSeek situation, if it says that you can do this AI infrastructure and stuff with much, let's say, with much less investment, we would likely to see that. I mean, we've seen a lot of capital expenditure on big magnificent sevens and stuff on AI infrastructure. But the thing is that if this money is being spent for like it makes no sense, you know, in that scenario. And if this DeepSeek is permanent in the market, we would like to see it's likely to see risk-off sentiment to come back, and that would lead dollar index, franc, Japanese yen, precious metals to outperform, and it's likely to see some high yields in that scenario. And if the situation is vice versa, as like it happened in last week, in the beginning of the week, DeepSeek had huge negative impact on risk, negative impact on markets, but then it is perceived like, okay, it's not that serious. I mean, I don't want to say it's not that serious, but at least I mean, it should be investigated more mentality got back in, and risk on sentiment gained, and the focus of markets shifted from a DeepSeek to US earnings. Then risk on sentiment came in. So if this is temporary, for sure, like a risk on sentiment is expected to come back. And lastly, the most important for now, and I think it will be the most decisive part in the like upcoming days, tariff sides. Over the weekend, Donald Trump announced 25% tariff on Mexican and Canadian imports, and 10% tariffs on Chinese imports. However, after discussions, actually this also happened to Colombia last week. After discussions with Mexico's president, he decided to delay for 1 month and instead deployed 10,000 troops to the border to address like illegal crossings. And this kind of move also mirrored in Canada as well, in order to eliminate laws like drug traffics and stuff. For now, tariff remain definitely the major potential risk for the markets, but they are currently with this like delaying 1 month, but they aren't an immediate market disruptor. The coming weeks for sure will be crucial in determining how the situation unfolds. But the bad news is China like against this 10% tariffs, there's nothing new, like there's no any like kind of development on that side. China had an action that, okay, we're gonna apply some like and like different tariffs to like US products and stuff, and that's a potential, I mean, I don't want to say bad trade war, but that's the only bad news that is existing in the current market environment. So if we see this like tariffs are permanent, and it is going to be applied to like they're going to be applied to all products, and the tariff rates are high, with definitely risk of sentiment, as we saw in the beginning of this week, which is like a DXY, franc, Japanese yen, and precious metals to outperform. But on the other hand, like vice versa situation, if we see tariffs are like a temporary, just like used as political threat, like the Colombia case, and if we see like a gradual tariffs, as it was suggested from Scott Bessent's plan, is known as like that, because like a gradual tariffs, for example, starting like 5%, I'm just making it out, but yeah, 5%, then 10% on like a specific products. That's more like let's say dovish way of putting tariffs. And if we see tariffs rates are relatively low, and if they don't like, if it's only applicable to like some certain products, then tariffs wouldn't disrupt markets that much, and in that scenario it's likely to see, likely to see this risk on sentiment to come back in, and we might see stocks, cryptos like OC and EM currencies, Euro CAD, to outperform, as you can see. I hope this table helps you with understanding the current market structure, and I hope it gives you some hint to evaluate what's going on, and helps you to understand, like helps you to react to the news flow. And as you can see, it all depends on how this is going to be shaped. So any kind of trade ideas that I'll be showing right now will be depending on these news. So that's definitely uncertain. So both scenarios that I'll be showing is like all of them are both directional. But I'll try to show you how you can generate your game plan through some major instruments. For example, let's start with Euro USD. As you can see, I was following this daily rectangle chart pattern here. Breakdown, pullback. This pullback, that risk on sentiment came in after like a deep seek. Then here you can see dollar index. Let me start with dollar index actually. So the weekly chart, as you can see, this 107 level, 108 level is pretty like a crucial. I'm following here, and if I see a potential reversal from here, I'll be long. That means risk off sentiment that I was showing in the table is intact. And if it comes below here, that means risk on sentiment came back in. Then this rectangle chart pattern would lose its validity after a point. But that's how I'll be structuring my positions according to upcoming news flow. So for example, let me show you this one, Canadian Japanese yen. So head and shoulder top chart pattern. So this is also this chart pattern also might go both directions. If we see a breakout from here, that means head and shoulder top failure chart pattern is intact, and the potential price target of that chart pattern would be around 127 levels. And on the other hand, if we see a breakdown from this level, that means head and shoulder top chart pattern is intact, and in that scenario the potential price target is around 90 levels. Okay, so if this comes down, what does that mean? Canadian dollar losing its strength and Japanese yen appreciation. That means risk of sentiment. If we see like a tariff situation with high tariffs, trade wars coming in, or geopolitical tensions, that means risk of sentiment will be intact, and in that scenario we would see this breakdown. As you can see, last week the bar was red, then it got a bit like up, but this week, as you can see, it's up because we started with tariff news, it went down. As you can see, this week's bars has so lower price than last week. That was the, let me show you daily chart. As you can see, daily open here with the Monday open, as you can see, open price is 104 levels. Then after this relief with like Trump's talk with Canadian Prime Minister, Mexican Prime Minister, risk on sentiment came back in, and it started to went up. As you can see, this like a macro side is also, like news flow side is also in line with the chart, as you can see. So that's how I evaluate any kind of trade idea. If risk of sentiment is intact, I would be preparing myself for a short position in Canadian Japanese yen. If risk on sentiment is intact, I would be watching a potential breakout from this level. That's my mentality in any kind of instrument. That's why I showed that table to you. For example, Euro Canada. Here, I just wanted to show you this in order to there might be a potential head and shoulder continuation chart pattern. And today, I mean, my video is mainly based on that table. I'm not going to show you a lot of chart this week, but just another one also for the Bitcoin I would like to show. Bitcoin currently is consolidating in this the 109k and 92k levels. It's consolidating within this level again, yesterday with that, I mean, this huge volatility we saw, I don't know, daily move. Look at here, we saw 91k and we also saw 102k, 10k move volatility just in a daily bar. So here I'm also monitoring that potential risk of sentiment would lead to a breakdown in Bitcoin, and potential risk on sentiment would lead to a breakout. That's how I prepare myself and how I combine the news flow and the macro side and the major drivers into charts, and that's how I evaluate in current environment. So that's all I'm going to talk about this week. I hope especially this table will be helpful for you, because I think it makes sometimes I mean, we're exposed to a lot of news, a lot of analysis and stuff, and summarizing all this this ideas and stuff in just one table is really helpful sometimes. So you can just you can just generate your trade ideas according to, and you can evaluate what's going on in the market with the help of this table. I hope it makes sense for you as well, and I hope you a really great week. Have a good one. Bye.